welcome to Midweek Macro. It is Wednesday, the 3rd of December 2025. There is an awful lot to go through today, plenty of news out there. First of all, we'll just do a couple of bits of housekeeping. Number one, the channel is flipping and flopping, but it's around about 4,000 subscribers. So I just want to extend a massive thank you to all new and existing free subscribers, paid subscribers, and founding members. It's always nice to hit those jackpots, especially those round numbers. So thank you very much. Secondly, we have seen a lot of exciting things in gold and silver and copper, which we'll get into. But I will point out that we are back with a lot of podcasts. So you have probably already seen that the podcast episode with Dr. Naomi Prince is available to all subscribers. The podcast episode with John Rubino is currently available to paid subscribers and founding members. That's going to be released to free subscribers later on today. And then yesterday, I had the pleasure of sitting down with a Cambridge House International and hosted the Jay Martin show, Jay Martin, and we spoke about geopolitics, natural resources, and so forth. That's also available to paid subscribers at the moment. That will be released to free subscribers later on in the week. And also on Friday morning, I'll be sitting down with Rudy Havenstein, and we will be going through, I'm sure, a bunch of topics then as well. Thank you for your patience over the last couple of weeks when I was in Paraguay. There wasn't as many podcasts being recorded. Then I should also say a big thank you to Chris Steadley of Live Squawk Commodity Corner as well, because we recorded the end of month macro for November, and that was recorded on the 1st of December. That is also out and about in the ether as well. So that's where we stand with the Contrarian Capitalist. I should also point out a big thank you to Adam Fayed, who does sponsor these midweek macros. He's offering a free 1-hour financial strategy session. It's no obligation, and you can take advantage of that by booking that in for free using the big orange button that comes with the post with this video. So whether you've got questions on retirement planning, investments, property, tax strategies, insurance, plan B in general, do take advantage of that 1-hour free call with Adam and his team. And again, look for the big orange button that comes in the post with this video. Also, I should point out as well, there's going to be the usual big amount of links to articles that you should read as well. Again, things that I've just found from this week so far. And I will start with copper. Actually, we don't normally start there, and the reason I start there is as of the 3rd of December, copper futures prices rose over 2%, currently around $5.40 per pound. Now, according to a couple of people, this has broken a 15-year downtrend line, and it signals the start of a new potential super cycle in copper. And that can come down to, we're looking at reindustrialization, expansion of the grid. Of course, copper is used for a lot of the wiring there. It's the second best electrical conductor in the world behind silver. And of course, AI data center growth as well. What is interesting is that people are citing potential supply shortages as well, and you will have noticed that in the headline with this video, that whether we're talking gold, whether we're talking copper, whether we're talking silver, the dynamics seem to be very similar for a lot of commodities at the moment, i.e. demand is much higher than supply. And I'm sure that you as contrarian capitalists are fully aware that bringing a supply or bringing a mine onto supply is not an easy thing to do. You can't just click your finger and all of a sudden a mine appears and people start mining. That doesn't happen. These things do take time without a shadow of a doubt. There's also some interesting forecasts for copper. I'm just looking at this note that I'm reading in front of me. Other people are indicating that forecasts are now for 2026 ranging from between $6.80 to $8 per pound on copper futures. We'll cover it a bit more in depth on the commodity wrap on the Contrarian Capitalist on Friday. But again, that is potentially breaking a 15-year downtrend there for copper. So very interesting times for that. Of course, one of the big talking points in the last week or so was silver. A lot of cooling issues in the SME, the CME last week. Of course, Thanksgiving, Black Friday, so it was what is normally a thinly traded holiday period actually turned into quite heavy trading outside of the US. Silver is looking at the monthly chart. Silver's on a tear. I mean, it's currently sat at $58, sorry, 50 cents. It is a case of onwards and upwards. And there can be as much manipulation or as much spoofing as there needs to be within the paper market. Again, I have to go back to the fundamentals of silver. We've also seen this week that forget the name of the company, but they forecast a $293 million shortfall in physical silver in 2026. So again, we can look at manipulation, we can complain about spoofing all we want. If we go back to the very basic fundamentals with silver, demand is higher than supply, and it does not look like supply is going to be increasing anytime soon. It's also important to point out that silver is a byproduct. I think 70% of its production is a byproduct. So there's only about 30% of true silver mines out there. So people should bear that in mind when they're thinking and looking at the price of silver. I know it's very exciting to see it at $58.50. I quite enjoy looking at it. I'm sure you enjoy looking at your mining portfolio as well, if you're in the mining portfolio. But again, we have to look at the complete fundamentals here. Demand for silver is much higher than supply. It's likely to be that way for a very long time. We have to remember that silver is, of course, used in a lot of industry. Again, it's the best electrical conductor in the world. And if we're pushing towards electrification of the grid and so forth, we're not even mentioning solar panels, things such as, dare I say, nuclear warheads as well. So it's got a lot of industrial use. And again, if supply is much lower than demand, we've not even mentioned retail. So again, the basic fundamentals are there for silver. I'd highly recommend you check out that podcast and video with John Rubino. He puts it much more elegantly than I just did. It's a similar story for gold. If we look at the gold price as well, the gold price is currently $4,220. And again, I'd urge you to go back and listen to the podcast video with Dr. Naomi Prince, because Dr. Prince has been speaking quite a lot about the gold supply. Now, we're very au fait here as Contrarian Capitalists with the demand for gold. We've seen, Tether have got 116 tons of gold and puts them on par with South Korea and Hungary in terms of gold holdings. We're well aware that the demand for gold is there, not just through central banks. Again, I've just mentioned Tether. Also, retail demand is picking up as well. And because of currency debasement, whether it's the US dollar, whether it's the euro, whether it's the Japanese yen, the demand is going to continue to increase. Of course, we've seen the 60-40 portfolio, the bonds and equity split. That's now been put into 60-20-20, with that 20% being in gold. So we've now got pension funds. We've now got hedge fund managers that are piling into gold. So that demand is going to be quite sticky. That's not going to be let's get into a position and let's sell it a week later. We're going to have big institutions, the big money really coming in to gold. So the demand is there absolutely and will remain there for a very long time. But on the supply side, gold has, I believe the supply of gold's gone up by just under 1% within the last 6 or 7 years, if I'm not mistaken. So the supply of gold is very inelastic. And that bodes well even more so for the price moving forwards. It doesn't really matter what way we want to look at gold and silver. The fundamentals are there. The price action, of course, has been very positive recently. But in terms of moving ahead, whether that be 2 years, 5 years, 10 years, Economics 101 will suggest that when the demand is much higher than supply, that price point's got to reset itself. And of course, that's going to end up going much higher. I know that there's also charts out there about going back to silver, about whether If that continues along the line of end to money supply, then silver, even from where it is now, has the potential to go up by over 13 times to bring it to around $680, I think it is, per ounce. I'm not going to sit here and say that that's going to happen. I believe that's going to happen, but we should not base any investment thesis on that at all. I know people will be asking, well, Contrarian Capitalist, what do we do with regards to, should we look to buy more gold? Should we look to buy more silver? I can't give you financial recommendations. I cannot give you financial advice. What I would say, and I have said for a long time, is that dollar cost averaging in, even at gold being at $4,220, even at silver being at $58.50, I would say that dollar cost averaging in would be a very sensible play moving forwards. And again, I'll go back to that magical F word, fundamentals. The fundamentals for gold are there. They're not going to change anytime soon. The fundamentals for silver are there. They're not going to change anytime soon. Even the fundamentals for platinum are there. They're not going to change anytime soon either. Across most commodities, there are structural shortages. So there are supply deficits at the moment. Gold, silver, copper, platinum, although the WPIC, I believe, in their Q3 report have indicated there might be a very small surplus next year in platinum. Palladium, there is a small deficit as well. And again, with palladium and platinum, they are at risk of jurisdiction risk. A lot of it comes from over South Africa, mainly South Africa, but also Russia as well. And of course, South Africa's got its own problems. People keep wanting to, play with Russia. So again, there's jurisdiction risk as well. And again, potential demand with hydrogen technology, hybrid vehicles, catalytic converters, and so forth. So the same issues that we're seeing structurally and fundamentally in gold and silver can also play into platinum and palladium as well. I'll have a quick look at the palladium and platinum prices. Let me just bring up those charts as we're here. So we have platinum is sitting at $1,660 at the moment, and the palladium chart, palladium is sat at $1,450. It's been quite a quiet start to the month for the precious metals, I have to say. The palladium chart, I think I find the most interesting of them all, because despite a big move in October, it's not really been doing anything in comparison to, say, platinum, copper, gold, and silver. So it is going a bit under the radar, so to speak. Again, I find that fascinating. If we have a quick look at oil, I'm looking at WTI chart. That's at $59.24 at present. I should point out that I'm in conversations with Dr. Anis Al-Haji for him to return back to the Contrarian Capitalist podcast. I think we're looking to agree at the start of January, so watch this space. We've also got Adam Rosenswag coming on in a couple of weeks' time, and again, I'm sure that he will go into the oil and gas dynamics as well. Talking of gas, natural gas spot hit a 3-year high earlier on. I think it was maybe the back end of last week, maybe the start of this week. And again, that's very interesting because there's a lot of dynamics there. The US is producing a lot of natural gas, but also there is a significant cold period, I think, going across most of the USA, and of course across quite a bit of Europe as well. I know that the natural gas market doesn't just rely on cold weather. I understand that, but it is one of the key contributing reasons as to why we've seen a 3-year high over in natural gas at the moment. If we have a look at the equities markets as they stand, we've got the S&P 500 at 6,838 at present. We've got the Nasdaq at 25,524. We've got the Dow Jones at 47,700. We've got the VIX index, so the thing that measures the S&P volatility, that's down at 16.55, and we've got the dollar index at 98.92. In terms of what we're going to see moving forwards within the equity markets, we saw that small business job losses soared in November. I've put a link to that as a Zero Hedge article. Of course, we've got the other jobs data coming out on the 5th of December. And of course, the next Federal Reserve meeting is on the 10th of December. Now, Dr. Naomi Prinz said this on our podcast episode recently, is that the markets are pretty much baked in. So she believes that there will be, and well, the market believes as well, that there will be a rate cut of 25 basis points come the 10th of December. Depending on the jobs data that comes out on Friday the 5th, it is possible that the rate cut on the 10th could be 50 basis points, but watch this space for that data that comes out on Friday. And of course, the new Federal Reserve chairman, I don't have that link in front of me right now, so I don't remember the name off the top of my head, but it looks like Trump is going to make an announcement this side of Christmas. And what's important to remember with that is that President Trump and Secretary Bessent, they want lower interest rates. They need lower interest rates. So what that means for the new Fed chair is that they're very likely going to be dovish, which will then mean that interest rates in 2026 are likely to go much lower. Again, I'll refer back to Dr. Naomi Prinz. She says that she would be expecting around 100 basis points of cuts in 2026. And again, that is going to lead on to the Federal Reserve, being a lot more dovish because of whoever is picked. And again, I forget the gentleman's name, but I know on Polymarket, it's got about a 75% chance of that happening. Talking of Polymarket, thank you for them for sponsoring this as well. And you can find that Polymarket market below with regards to the Federal Reserve. The point being that let's have a look at the broader picture here, that if a dovish Fed comes in, a Fed chair comes in, we can expect more basis points cuts. Then that in turn does two things. That will increase the price of, say, gold and silver, for example, because the currency, in this case, the US dollar, that's going to continue to decline because more dovishness is going to lead to rate cuts, which is going to lead to in some form of QE anyway. And again, if you are printing currency, that's going to push up the price of assets based in that currency. That's why you're going to see gold and silver and so forth, I think, continue to increase moving forwards. And of course, the stock markets, the S&P 500, for example, I have never, to my knowledge, put a price target on it, but I certainly think that 7,000, 7,500, it wouldn't surprise me to see 8,000 achieved next year. And again, we'll go back to the fundamentals: dovish Fed, rate cuts, currency printing, happy days, happy days. To add fuel to the fire, so to speak, we've also got to look at the midterms in the USA in 2026. Now, they are very, very important because if Trump is going to secure his legacy, or in the words of Jay Martin, potentially run for a third term, Jay Martin believes that is likely to happen. You have to look at the current position that the Republican Party have the House and they have the Senate, but it's very tentative. So in order to continue doing the work that they're doing, they are going to need to further solidify their stranglehold on the House and the Senate. So therefore, these midterms are of incredible importance to them. So if they're going to go into the midterms, people are going to want to see a good-looking stock market, regardless of concentration risk and regardless of what's happening. And if the S&P is at 7,000 plus, most people are going to look at that and go, "Oh, the stock market's doing well. The president must be doing okay," regardless of your political thoughts. The layman's out there are going to look at that. They're going to look at their portfolios and go, "I think he's doing okay." The thing being that, again, President Trump, Secretary Bessent, they're going to have a key eye on 2026. Now, if they can further put their stamp on the House and the Senate, that's going to secure them through to 2028. And I think given the state of politics in the USA at the moment, I would imagine that the president in 2028 is more than likely going to be Republican. I don't think Trump's going to run for a third term. As I said, Jay Martin thinks that. Check that podcast out when it comes out. But anything could happen. The point being that 2026 midterms will set the Republican Party up until 2028 and more than likely then set it up through to at least 2030, possibly 2032. Now, that's important because there's a lot of things going on within the Trump administration at the moment. I'm not saying that we have to sit here and agree on it. I'm sure that everyone's got their own views. The point being that if they are going to bring in a dovish Fed and they're going to lower the interest rates, then that's going to be very good on paper. That's going to be very good in terms of how the S&P looks, but also how gold and silver and commodities look. So that's the thing we have to bear in mind here when we're trying to bring all these things in together at the same time. If we have a quick look at something, I just want to bring up something here as well, just in terms of mining. And again, don't always cover mining on the Contrarian Capitalist, but it's Barrick Gold, and they are seeking to spin off US operations. And as a result of that, their price has hit a 13-year high. Again, I'll link to this because this has come via Goldfix, via VBL, via Zero Hedge. So I'll link to this as well. And the reason I bring this in is because if you think and you have the belief that gold is going to go much higher for the reasons that we've discussed, and if you think that silver is going to go much higher for the reasons that we've discussed, and again, bringing in, the Federal Reserve and current policy, then the chances are that the miners are going to do very well. Now, for those in the know, yes, the mining results throughout most of this year in 2025 have been absolutely fantastic. We've seen a lot of Q3 results that have been very good. I imagine at Q4, when those results start coming out next year, they are going to be likely even better. It's a good space to be in from a mining point of view. Barrick is one of the biggest mining companies out there. It's one of the ones that people normally mention. They'll mention Agnico Eagle, for example. They'll mention Newmont. They'll mention Barrick. Barrick has had its own problems. It's not necessarily been the best well-run mining company. But the reason I'm bringing this to your attention is that even if Barrick is producing a 13-year high in its price, then imagine the other companies. And Newmont, I mentioned, it was around about $30, I think, in February of this year. It's now around the $90 mark. And that's in the space of 10 months, a little bit less than that. So even the big bell cows of the mining industry are doing well. And again, that's off the back of the strength of the gold and silver price. And I always say, and I always bring up Don Direct's name, if you want to find out more about mining companies, go and follow Don Direct, Don's newsletter on Substack. I find him to be one of the best people out there with regards to mining companies. The point being that if a company like Barrick, who have had their own organizational issues, are still rocking and rolling and their prices are onwards and upwards, imagine what some of the junior miners are going to be like. And again, I'll go back to the belief that you should have as well. If you think gold and silver are going to continue to go much higher, then the chances are, and this isn't all miners, this isn't financial advice, chances are most of the mining companies are going to go much higher. We're also seeing a lot more with regards to mergers and acquisitions as well. And again, I'll point you back to Don Direct too. I think he's one of the best people in the industry with regards to mining companies. Again, I'll link to that Barrick article in the post that comes with this video. Just a couple of other things, looking at a couple of other news articles of interest, keeping on the big geopolitical theme. Obviously, a lot of things going on, as always, between Russia, Ukraine, and talks and so forth. So I've linked to that as well. We've spoken about mineral supply, and again, I've linked to an article about the USA and again, what they're trying to do behind the scenes as well. I know that there's a few people on tour speaking with different countries about trying to secure that supply chain. Looking a bit closer to home in the UK, the UK's most dangerous man, which is Ed Miliband, has been warned that the UK data centre boom risks guzzling gas. And again, we've seen that energy policy in the UK is flawed, to say the least. So that'll be interesting to see how that plays out, because if you're going to fund loads of data centres, you're going to need a lot of energy. And funnily enough, the UK does actually have a lot of natural gas, not just under fields in Lincolnshire, but I believe also in and around other parts of the country. Oh, and it's got a lot of oil in the North Sea as well. But of course, we're going down the same route as the EU which isn't good. And talking of energy and policies that don't make sense, the current Labour administration in the UK plans to ban wood burners to bring Britain on par with the EU. So if it's not cold enough as it is, you're probably now not allowed to use your log fire. So congratulations and good luck if you are back home in the UK. I'll finish on something that was I found incredibly funny. It's got nothing to do with geopolitics or energy at all, but it was a fact that a drunk raccoon was found passed out on in a liquor store over in Virginia. There's a funny photo of it. It is attacked a lot of alcohol and it is completely comatose by the toilet. I found that quite funny. Something a bit different. I know it's a bit lighthearted as well. But also, interestingly, I've linked to it on the BBC, but they have written that and I quote, "The store had been broken into by a very intoxicated raccoon," end quote. I don't know about you. I'm pretty sure that raccoon was not drunk when it went into the liquor store. I'm pretty sure it would have been the liquor or the alcohol that made it intoxicated. So again, I know it's a very simple story. It's a funny story, but also shows that the level of BBC writing is substandard, is the Substack and YouTube friendly word that I will use for that. Again, I'll put a link into that. I just found it funny. So fingers crossed. As mentioned, plenty of things going on the Contrarian Capitalist. Again, we're sort of teetering over 4,000 subscribers. So I just want to say a massive thank you to everyone out there. If you're watching this and you're not yet even a free subscriber, please do become a free subscriber to the Contrarian Capitalist. It's contrariancapitalist.substack.com. Also, it's good to see that more and more people are becoming paid subscribers and founding members. Paid subscriptions start from $11 a month. If you do that on an annual, it works out at about $9.20 a month. And if you become a founding member, that's a one-off lifetime investment. So you pay once and that's it. You are a Contrarian Capitalist for life. I am also working on a lot of other products and services in the background because a lot of people have been asking me for one-on-one strategy calls. So I'm working on getting all of them set up. I'll put them in the commodity wraps and the market wraps moving forward. So you can book in a one-to-one private strategy call with myself, amongst other things that I'm working on in the background. Again, it's an honor to be able to serve you. Please allow me to serve you at a higher level by becoming a paid subscriber. contrariancapitalist.substack.com/subscribe. Have a fantastic rest of the week. We'll be releasing loads of podcasts and so forth in due course. I'll be back with a commodity wrap on Friday. Have a good week. Take care.